This section deals with the accounting equation. And if you haven't watched the session on classification of accounts, it might be beneficial for you to do so first, as we use quite a bit of that terminology in this section as well. Let's start by looking at the main elements of the accounting equation. We've now already established that the accounting equation can be defined as assets equals liabilities plus owner's equity. So let's just recap what each of those items mean. Assets consists of both current as well as non-current or fixed assets. Current assets, we said, are items that we can sell or change into cash within a relatively short period, less than a year, whereas your non-current or fixed assets is something that you'll keep for more than a year, like your buildings and so forth. Liabilities can also be divided into current and non-current liabilities. Again, your current liabilities are obligations that need to be paid within 1 year, and your non-current liabilities are your longer-term debt, money that needs to be repaid over more than 1 year. Owner's equity, we said, consists of capital minus any withdrawals that the owners make during the operations of the business, and we call that drawings. And then if there's any net profit left from the operations of the business, then that gets added to the capital amount. And if it's a loss, then it simply gets deducted. So those are the three main elements of the accounting equation. And what is really very important is the fact that money that is raised from the right-hand side of the equation, in other words, all the liabilities and all the owner's equity part, that side of the equation is used to buy the items on the left-hand side of the equation, in other words, the assets. And that means that the left-hand side must equal the right-hand side at all instances, because whatever money we got into the company, we should have done something with. We either bought assets, or we put the money in the bank, or we invested the money. It doesn't really matter what we did with it, but we did something with it. So we have to account for every single rand and cent that came into the business in the form of liabilities or owner's equity. Therefore, the accounting equation must always balance. And this is very important when we look at any transaction that we do in the company. By means of an example, I'm going to explain to you how it's possible to derive at any one of these elements by using the accounting equation. Let's look at the following example. Kate is the owner of Mars Services, which offers a carpet cleaning service. As at 31 March, Mars Services owns equipment amounting to 120,000 Rand. Clients owe 50,000 Rand for services rendered, and Mars Services owes 25,000 Rand to a supplier for parts purchased. Mars also has 8,000 Rand cash in the bank. Determine how much capital Kate started the business with. Okay, so under normal circumstances, we know that our accounting equation says assets equals liabilities plus owner's equity, but we don't want assets at this point. We want to know what capital she started with. So we want to know owner's equity. We want to know how much the owner's equity is. That means that we have to then change the accounting equation around a bit in order to be able to do that. So, mathematically speaking, if A equals L plus OE, then it stands to reason that if we want owner's equity alone on one side, then we have to deduct liabilities from both sides in order to do that. So we end up with an equation of assets minus liabilities equals owner's equity. Assets in this case, if we have a look at what is part of the example given, then we can identify that Kate has equipment. She also has debtors because she's got clients owing her money, and she's got money in the bank. She's got cash in the bank. On the other side, she also has liabilities because she has creditors. She owes a supplier for parts that she purchased. Okay, so if we had to plug some figures in here, Then we would see that equipment amounted to 120,000. Clients owed her 50,000 rand, so that is the debtor's amount. And she has 8,000 rand cash in the bank. The creditor's amount for the parts that you purchased from her suppliers is 25,000 rand. So what we need to do is to add all the assets together. In other words, the equipment, the debtors in the bank, the 120,000, the 50,000, and the 8,000. We have to add up all of those together, and from that we have to subtract the liabilities. So we have to subtract the creditors amount, which in this case is 25,000 rand. What we're left with is the owner's equity. And in this case, the owner's equity amount is 153,000 rand. So in this example, you can see how easy it is to determine any one of the elements of the accounting equation if we have information about the other two and their components. Normally though, when you work with accounting transactions, you would want to know what the effect is of a transaction on the accounting equation. In order to do that, I propose that you ask yourself 3 questions. The first question is, what are the 2 accounts involved? The second question is, what type of accounts are they? And the third question is, do they increase or do they decrease? I'm going to explain how to use these 3 questions by using some examples. Example 1. Let's assume our transaction is the following. The owner contributed a vehicle worth 100,000 rand. Okay, so let's look at question 1. Question 1 said, what are the 2 accounts involved? Now, if you look at the sentence, the names of the accounts should pop out at you. Sometimes you just need to use different terminology. So the first part of the sentence says the owner contributed. So if the owner contributes, it means he gives the business something, and we call that capital. So the first account that we'll work with is capital. The next part of the sentence says what he contributed. He contributed a vehicle. So the other account that we'll work with is vehicles. So now we've identified the 2 accounts that we're going to work with. The one is capital and the other one is vehicles. The next question says, what type of accounts are they? So we now have to classify them. So again, if you haven't watched the section on classification of accounts yet, please go there and revise it so that you are quite clear on what types of accounts these are, because this is very important going forward. So in terms of question 2 then, capital can be classified as owner's equity. Vehicles can be classified as assets, and at this stage it's not necessary for you to say whether it's a current asset or a non-current asset, because we're simply working with the accounting equation. And the accounting equation has only 3 main elements, those being assets, liabilities, and owner's equity. Okay, so question 2 then, classification, capital is owner's equity and vehicles are assets. Question 3, say, do they increase or decrease? Well, if the owner contributed a vehicle, it means that the owner's equity will increase, meaning that the owner has put more assets or money, value into the business, and that the business now owes him more. So owner's equity increases. But vehicle is an asset, and if I've got another additional vehicle in the business, then it means that my assets have also increased. So both owner's equity and assets have increased. To test whether we have this right, we need to use the accounting equation in its mathematical form. In other words, assets equals liabilities plus owner's equity, and then go and plug in the amounts and use a plus or a minus sign to indicate increase or decrease in order to see whether you have this correct. So if we now go back and we say, right, we said assets increase by 100,000 rand, then on the left-hand side of the equation, we have a plus 100,000. Nothing happens to liabilities, it stays the same, so it stays 0. Plus owner's equity also increases with 100,000 rand, so owner's equity is plus 100,000. If you look at the mathematical implication there, you will see that the left-hand side then equals the right-hand side, because both sides increase with 100,000 rand. So mathematically it is correct, which means that our question 1, 2 and 3 is also correct, because we have clearly classified the accounts correctly and have decided whether they increase or decrease correctly, because my accounting equation balances. The left-hand side is equal to the right-hand side. Okay, so let's do a few more examples. I'm going to do a few to show you all the different types of increases and decreases that you can get. Example 2. The transaction is as follows. Settled an account the business had at Macro, 9,500 rand. Okay, so when we settle an account that we had at a certain place, it means that the business owed money to that place, which means that that place was a creditor to the business, and we're now paying the account. So what two accounts then do you think would be involved there? Well, clearly if we had to pay money, then our bank would be involved. And if we had to pay the creditor, then creditors would be involved. So let's have a look at the classification then. Bank is an asset because it's something we own. And creditors is a liability because it's something we owe. So it's very important for you to get the classification right in order to then decide on question number 3, whether it increases or decreases. Okay, so when I pay my account, does my bank increase or decrease? Well, obviously it decreases because I'm paying money out of the bank account. So the bank balance becomes less, and therefore my bank or my assets decrease. Creditors, I pay off my creditors, so I don't owe them that much anymore. I owe them less because I've now paid part of my account, or maybe my whole account. So the amount that I owe creditors in total becomes less. So my liabilities decrease. Let's check with the accounting equation whether we are actually mathematically correct. If assets equals liabilities plus owner's equity, and I have a look at my assets will decrease with 9,500 rand on the left-hand side, and on the right-hand side my creditors also decrease with 9,500 rand. Nothing happens to owner's equity, then mathematically I can see that that equation balances because both sides decrease with 9,500 rand. Example 3. The transaction is bought a machine on credit, 16,500 rand. Okay, so let's have a look then at what are the two accounts. Question 1 is always, what are the two accounts? In this case, I bought a machine, so machinery would be my one account. I bought it on credit, which means that I didn't pay cash for it immediately and that I still now owe somebody the money for it. And that means that I have creditors. So the two accounts involved is machinery and creditors. Let's classify them quickly. Our machinery is something we own. We bought the machine, even though we bought it on credit, it now belongs to us. So we own it, and therefore it is an asset. Again, it's not necessary at this stage to classify it further. We will do that at a later stage when we need it. So machinery is an asset. Creditors, on the other hand, is money we owe. We've now bought it on credit, so we need to pay these people at some stage. So they are seen as a liability because we owe the money. What happens? Question number 3, does it increase or decrease? Does it get more or does it get less? Well, when I buy a machine, I have an additional machine, which means that my assets increased. I have more of it now. And on the other hand, when I buy something on credit, it also means that I owe more money, which means that my creditors increase because I now still have to pay these people at some stage. So in this case, both assets and liabilities increase. Am I correct? Well, I can check this by using the mathematical accounting equation and checking. So on the left-hand side, I have my assets increasing with 16,500 rand. And on the right-hand side, I have my liabilities increasing with 16,500 Rand and nothing happening to my owner's equity. So clearly on this equation, I can see that the left-hand side equals the right-hand side, and that I am correct in my estimation that I have classified assets and liabilities for this transaction and that both of them increase. On to the next example. Example 4. The transaction is as follows. Paid 700 Rand for insurance by cheque. Okay, so the first thing we need to do is to decide which are the two accounts that is involved here. If I pay for insurance, then clearly insurance must be the one account. And if I pay something by cheque, it means that I'm paying it out of my bank account, and therefore bank will be the other account that I work with. So what now needs to happen is I need to classify these accounts. Firstly, bank. Bank is an asset because it's the money that I have in the company that belongs to me. I own it. On the other hand, insurance is an expense. Now you'll see that the block has been subdivided into two different columns. I've done this to show you what effect an income or an expense has on owner's equity, because remember we said that incomes minus expenses equals profit, and profit belongs as part of owner's equity. It gets added to the capital and it belongs to owner's equity. That means that when we have an income or an expense in the company, there will be an effect on the owner's equity on the accounting equation. So owner's equity includes incomes and expenses, and different things will happen with incomes and expenses. If you think of the fact that we said that income minus expenses equals profit, and that profit gets added to owner's equity, it therefore stands to reason that any income will increase my owner's equity, and any expense will decrease my owner's equity. So think of that logically. You have a pot of money, and as people pay you, you put money into that pot, so your owner's equity or your capital becomes more. But as you pay out things to buy items with, you take money out of the pot, and therefore your owner's equity or your pot or your capital becomes less. So any incomes will add to the pot and owner's equity will become more, but any expenses you pay out of that pot will reduce your owner's equity. It's important, though, to understand that both incomes and expenses can either increase or decrease. Let's think about this concept quickly. When I pay for the insurance, for example, 700 Rand, it means that it's an expense, and the expense itself increases. Because over here, if I want to know how much I have spent on insurance, if I keep a cumulative total, and let's say I pay 700 Rand per month, over a year period, then at the end of the year I will have 700 times 12 in the insurance expense account, which means that in January I pay 700 Rand, so in total I've paid 700 Rand for insurance. In February I pay another 700 Rand, so in total I have now spent 1,400 Rand on insurance. So the insurance expense in my books of my business have become more. They've increased because I've spent more on insurance. And at the end of March, I will add another 700 Rand to that. So in total, I would have spent 2,100 Rand on insurance. So every time I spend on insurance or pay for the insurance, then the insurance expense account in the books of the business becomes more. It could become less. It is possible. For example, let's assume that the insurance company overcharged us and they did a wrong deduction from our bank account and we should have only paid 600 instead of 700. Then at some stage they can pay us back the money, which means that my expenses will decrease. It simply means that in the books of the business, if you look at the insurance expense account, the amount that's in there at any stage increases or decreases depending on what you do to it. So if you spend more money on insurance, then the total amount will increase. But if you, for example, get a rebate or a discount, then the amount will decrease. So it's important that you look at the effect of incomes and expenses on owner's equity in the accounting equation. So in this case, for example 4, when I pay some 700 Rand for the insurance by check, it means that the insurance amount is an expense, and the expense increase, and when an expense increase, it means my owner's equity decrease because I take money out of the pot. It decreases what the owners own in the company. Okay, so let's test this by means of the mathematical accounting equation. Assets equals liabilities plus owner's equity. We've now established that our assets decrease with 700 Rand. So on the left-hand side of the equation, we have a minus 700. And on the right-hand side of the equation, nothing happens to liabilities, but owner's equity also decreases with 700 Rand. So the left-hand side equals the right-hand side because both sides decrease with 700 Rand. Can you see how important it is that you take the classification a step further when you work with the accounting equation? Because we've classified insurance as an expense, but expense in itself doesn't appear in the accounting equation because it actually forms part of owner's equity. So here it's very important then for you to acknowledge the fact that because the expense increases doesn't mean that the accounting equation will increase on the right hand side, because an expense increasing actually has an inverse effect on owner's equity. It makes the owner's equity less. Example 5. The transaction is as follows. Purchased a vehicle for 25,000 Rand and paid by check. Okay, so the first question we always ask ourselves is which are the two accounts involved. If we purchased a vehicle, then clearly the one account must be vehicle. And if we paid for it by check, then it means we paid out of our bank account, and bank must therefore be the other account. So my two accounts are vehicles and bank. And now I need to classify it. Question 2 says classify it. Vehicles is something the business owns, so it's an asset. But bank is also something the business owns. It's also an asset. So now it's very important for us to go and look at what happens. Does it increase or does it decrease? When I buy a vehicle, then the vehicles account or the asset account increases because I have more vehicles now. But because I paid for it by check, my bank account will now be less because I paid the money out of the bank. I took money out of the bank to pay for it because I paid by check. So in that case, that asset, the bank, decreases. So in this case, we'll see that the effect has been that my assets both increase and decrease. And clearly with the accounting equation mathematically, that will show on the left-hand side of the equation. Because we increase and decrease the left-hand side with the same amount, it stays exactly the same, which means that the accounting equation still balances. Example 6. Purchased stationery from Dan Traders for 10,000 Rand on credit. Okay, so the first thing we need to do is to look for the two accounts involved. And again, look at the terminology that's used in the sentence. That will normally tell you what the story is. In this case, purchased stationery, that's what we bought. So stationery will be the one account. And we purchased it from Dan Traders on credit, which means that Dan Traders is a creditor. So the two accounts involved would then be stationery and creditors. Okay, let's classify these accounts quickly. Creditors is money we owe to Dan Traders now. So Dan Traders is a creditor and therefore creditors are seen as a liability. On the other hand, we bought stationery. Now what is stationery? Stationery is something that we use in the company on a daily basis. It's not stock, because stock are things that we can resell for a profit. or that we use in the operations of the business, and stock are seen as assets. But in this case, stationery isn't stock, it's not inventory, even though we will keep an inventory of stationery, but that's something totally different. But stationery are things that we use on a daily basis, so they are seen as expenses. And because we are now working with an income or an expense, we also have to look at the effect on owner's equity. So creditors is a liability, stationery is an expense, and expense is part of owner's equity. Okay, so let's look at the effect on the accounting equation. Does these items increase or decrease? Okay, creditors increases because I owe Dan Traders more money. I've bought more on credit again. And stationery, the expense increases because I've bought some more stationery. So in the books of the business, over the period of, let's say, a year, if I had to look at the balance each month, then that balance will grow bigger because every month I buy stationery. So in total, every month the total of the stationery account becomes more if I add every time I buy something to the previous total. But remember that we said previously, when we work with an expense, it's not to say because the expense increases that my owner's equity part increases, because actually it has the opposite effect. In this case, for example, because the expenses increase, my owner's equity decrease because the business now has less money. Okay, so it's quite important that you understand here that the effect of the expense increasing has the effect of owner's equity decreasing. If this was an income increasing, for example, then my owner's equity would have increased because incomes make my owner's equity more, but expenses reduces my owner's equity. So let's just test this by looking at the accounting equation again, just to make sure for ourselves. Assets equals liabilities plus owner's equity. On the left-hand side of the equation, nothing happens because we had no assets. So all the activity is on the right-hand side of the equation. So we have liabilities increasing with 10,000. That was our creditors amount. And then we have owner's equity decreasing by 10,000 rand. Because remember, even though expenses increase, the effect on the accounting equation is in terms of owner's equity. And when you have more expenses or more spending on expenses, then it means your owner's equity decreases. So if I look at the right-hand side of the equation, I increased and decreased the right-hand side with 10,000 rand. So plus 10,000 minus 10,000 gives me a result in 0, which means that the accounting equation balances. Okay, and therefore I know that I classified these items correctly. Let's have a look at the last example, example 7. And this one shows what happens when the opposite happens to example 6. So the transaction is return stationery to Dan Traders that was included in error on our order, 2,000 rand. So the previous example said that we purchased stationery from Dan Traders for 10,000 rand on credit. When we received the stationery, we then saw that some of the stationery wasn't ours, it's not what we ordered. They put it in error on our order and they charged us for it. So actually our order should have come to 8,000 rand, not 10,000 rand. So in the books of the business, my expense shows a greater amount than it should, and therefore I now have to correct it. So what are the two accounts involved? Well, it's exactly the same as the previous example. Nothing has differed because I'm returning stationery, so my stationery account needs to be adjusted, and I'm returning it to one of my creditors. So my creditors account has to be adjusted because where I've now indicated in my books previously that I owe my creditors the 10,000 rand for stationery, I actually have to correct that now and say that I only owe them 8,000 because 2,000 of that order was not mine. It was error and I need to give it back. So the two accounts involved is creditors and stationery again. Creditors we've already established as a liability and stationery an expense. Now we just need to look at whether it increases or decreases. increases. So when I return stationery, I give it back to Dan Traders, which means that the expense decreases. I don't have that expense anymore because I've given the stock back to them. And my creditors also decrease because I now don't owe Dan Traders the money for that stationery anymore because I've actually given them the stationery back. So my creditors decreased and my stationery, my expense decreased. And the effect of the expense decreasing on my owner's equity means that my owner's equity now increases. Because I've given back some of this expenditure on stationery, it means my pot is bigger again. Okay, so expenses decreasing means that owner's equity increases because expenses has the opposite effect on owner's equity than income does. So whatever happens with expenses, it will have the opposite effect on owner's equity. Whatever happens with income will have the same effect on owner's equity. So let's just make sure that we are correct by testing it mathematically. The accounting equation says assets equals liabilities plus owner's equity. There's no effect on assets, so the left-hand side of the equation stays as is. And on the right-hand side, I have both my liabilities and my owner's equity changing. My liabilities decrease with 10,000 Rand, so it's minus 10,000. But my owner's equity now increases with 10,000. And if you look at minus 10,000 plus 10,000, then those two cancel each other out, which gives us a resultant 0. And therefore, the two sides of the equation is equal. And we know that we are correct. Okay, I hope that you understand the accounting equation a bit better now.